Hi everyone, let's cover my Elliott Wave analysis on Doge on the 4-hour time frame, starting with the bullish scenario where we have a finished 3-wave corrective structure to the downside and we look for continuation to the upside. In this scenario, the move to the upside here starts as a 5-wave impulsive structure in a wave 1, followed by an overlapping, messy, slow, sideways corrective structure in a wave 2, and then we get another move towards the upside. Now, based on the local structure here in this move to the upside, I personally prefer to count a couple of 1-2s here, have a wave 3, and this is the first wave 4. So you then get 4, 5, and then a couple more till eventually price slowly starts curving, slows down, maybe a couple more highs, a lot more overlap, but then it turns around and you want to see another corrective move to the downside in a wave 2. After your wave 2, you then eventually like to see a wave 3 to the upside on increasing volume. Now in that scenario then, we do like to see price eventually take out this high at 0.29. In the bearish scenario, we're looking for a continuation of the range. So this move to the downside has a higher probability of being a 3-wave corrective structure compared to any more bearish diagonals, which would be a 5-wave, 1, 2, 3, 4, 5. It's lower probabilities naturally because a diagonal by itself has lower probabilities than counting that same structure as a corrective move or as a multi 1-2, but a multi 1-2 here doesn't work because price moved back towards the upside here. So therefore, preferably, we are initially looking at the move down as a 3-wave structure. Now, therefore, we're then looking at this range here as either a wave WXY, which I currently have on my chart, or we're going to consider a flat structures, which then means wave A, you're going to get a wave B and a wave C. However, I only really like to consider flats if price can move at least beyond the 0.9 Fibonacci, which is sitting at 0.27575 on my chart logarithmic scale. So as long as price is not at least touching the 0.9, I would put the WXY on my chart instead of an ABC for a flat structure. Now, when we consider a WXY, we basically look for a continuation of a sideways range and upside at a later stage. You can see that I have the 886 on my chart, which is important because if price can touch the 886 taken from the start to the end of W, sitting at 0.27412, it only increases the probabilities more to sooner or later take out this high at about 0.29. Now, what's interesting between the bullish and the bearish scenario is that this move to the upside is counted in a similar way. You just look for an impulse, couple of 1-2s, you get your wave 3 on a increasing amount of volume, and then you get your wave 4s and your wave 5s. Eventually you move sideways, overlap, a bit of a rounded top, and you look for a retracement to the downside. And what you also preferably like to see is price moving up on a decreasing amount of volume, which at the moment is also the case. So that helps in both the bullish and the bearish scenario, where in the bullish scenario we would consider another 1-2 continuation up. In the bearish scenario, you finish a wave C and you look for larger corrective structures to the downside to continue this range. In general, however, the probabilities are highest to sooner or later take out this high at 0.29. So that is the overall directional bias. Now, if you then look at some of the support and resistances, then price, when moving to the downside here, touched my support at 0.20, perfect touch with a wick, moved towards the upside ever since. And now we're at resistance, 0.26381, the value area low of this range here. Now, what is interesting to me is the range point of control, just a little bit higher at 0.27168. And another reason why I personally think it is quite interesting to keep an eye on that structure is that when I go to the 3-minute time frame, from the 4-hour boom to the 3-minute, well, we can see a 3-wave structure to the downside here. This does not really look like a nice impulse, looks 3-wavy, which would increase the probabilities then to still take out that high. Of course, we are at resistance, so it's not a place where I'm looking for longs at all. This is where I actually take my profits on my longs when we hit some of these resistance levels. But if you can move beyond the value area low here, then the range point of control becomes an interesting target. And then we'll have to wait and see how price reacts there. Because again, from an Elliott Wave point of view, when we look at this structure, yeah, it does make sense to consider your 1-2s here, your 3, and then look for a bunch of wave 4s and 5s into resistance and then for a reversal. A level that is not on my chart but I do want you to keep in mind is the point of control of this range. Now I have an indicator here on my chart, which is the PVP indicator, periodic volume profile, which is this one here. So you can check it out. And you can see that if you put the settings on the weekly, here on week, then we have a point of control here at 0.24. That is the current week's point of control. And if price can finish somewhere over here, then this level most likely is going to be like this week's point of control. But next week, this will be a naked point of control, which is going to be an area of support. And for the bulls, preferably, that level would hold, because then you move down into this range, which then is a lower degree wave 4, which is perfectly fine as a target. So then for a bullish case, you would maybe move up to that range point of control higher, eventually retrace, sideways corrective, whatever, like structure to the downside. And then we have support over here for a potential 2, also with this range. So it's nice, like nice structural support as well. It's just a level I keep in mind, which I don't yet have on my chart because it's not yet a naked point of control, but at least keep it in mind, no? So here you go. These are the levels. You can see that to the upside, I also have levels over here at 0.33, 36, and then eventually 38.9, like basically 39, as you can see. If price moves to the upside, those are areas that I will keep in mind. And then we have horizontals, so time frame horizontals, support and resistance levels. You can see them on my chart combined with the point of controls. It gives you like pockets of interest. You can see weekly and range point of control quite close together at like 0.27. Okay. And this then gets us to the probabilities. In general, probabilities are higher to sooner or later take out this high at 0.29. That is basically the overall directional bias. This move to the downside has a higher probability of being a three-wave corrective structure, increasing the probabilities to sooner or later take out that high. A diagonal to the downside here, lower probabilities, as a diagonal, especially a leading diagonal, is not a very common structure, and therefore automatically looking for corrective structure down has higher probabilities, which automatically then means taking out that high is a directional bias. On the 4-hour time frame, when we consider this move towards the upside, at the moment I favor more a impulse to the upside, so a bunch of 1, 2s, 3, and then eventually get the wave 4s and the wave 5s into resistance, slow sideways, and then look for a retracement. Alternatively, you get continuation, right? So the alternative, more bullish scenario is this is your 1, 2, you get 1, 2, 1, 2, and then I don't know, like you basically need like a 1, 2, 3, 4, 5, 1, 2, maybe a 1, 2, like basically just stacking 1, 2, 1, 2, 1, 2, 1, 2. It's just lower probabilities at the moment when I can like look at this structure. Preferably when you are stacking 1, 2s, you have overlap between the 1, 2s. So you get a 1, a 2, a 1, 2, 1, 2. It looks a bit like a diagonal. And then you get your wave 3. And here we can quite clearly see a gap over here, which is something you like to see when you count 1, 2, 3, 4, 5. So it makes sense from a probability point of view to first consider an impulse, 1, 2, 3, 4, and then eventually 5. Look for retracements compared to getting a multi 1, 2 in 1, 2, 1, 2, 1, 2, 1, 2 to infinity, and eventually your wave 3 to the upside. So after a 5-wave move, sure, we're looking for a retracement. Sure, this retracement can be shallow, preferably is touching at least the 0.382 Fibonacci. So depending on where price eventually creates its high, preferably you move at least to the 0.382. But if price can move to the upside to that range point of control, maybe you can see the 382 at 0.24, which is quite nicely aligned, or at least closely aligned to that potential weekly point of control, naked point of control next week, hopefully, at 0.24. So you can see that, you know, some of those areas of support and resistance are then in confluence with one another. So yeah. This being said, hopefully you found this video helpful or valuable. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the altcoin analysis playlist where you can find many more altcoins. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.